day everyone, especially to you mom. We are the last reporter group 6, so I'm the first presenter to our group. I'm Annie Emilian. So our topic is regular allowable itemized deduction. So what is regular allowable itemized deduction? So refer to the specific expenses that taxpayer can deduct from their taxable income subject to certain rules and limitations. These deductions are typically claimed by itemizing the expenses on the tax return and provide the taxpayers with the opportunity to reduce their taxable income and potentially lower their overall tax liability. So we proceed to the itemized deduction from gross income. First is interest expenses, second is taxes, third is losses, fourth is bad debts, number 5 is depreciation, number 6 depletion, number 7 charitable and other contribution, number 8 contribution to pension and trust, number 9 research and development cost, number 10 other ordinary and necessary trade, business or professional expenses. First, I'm going to discuss about the interest expense is a primary kung mangutang ka ng pera o kaya may binili ka ng assets, meron siyang interest. Ito yung mga requisites on the deductibility of interest. First is valid indebtedness. Meron tayong valid sa pagkakautang, ibig sabihin talaga meron tayong utang. Hindi yung gawa-gawa lang. Pwede sabihin mo sa magulang mo na may utang ka. Pwede mo rin palabasin na may utang ako sa iyo para magamit as a deduction. Kailangan may utang. Second is taxes. So, that of the taxpayer, kumbaga, the taxpayer may utang talaga siya sa taxpayer. Hindi siya yung tipo gawa-gawa lamang utang talaga siya ng taxpayer. Third is must be connected with the taxpayer's trade, business, or exercise of profession. So, kailangan ginagamit sa business mo. Paano mangutang ka lang ng personal loan na hindi naman pala ginagamit sa business? Dapat kailangan gagamitin sa business at para magamit natin siya as a deduction. Fourth is must have been paid or incurred during the taxable year. So, the requirement that expense must have been paid or incurred during the taxable year means that for an expense to be deductible, it must have been either paid, actual cash or outflow, or incurred obligation to pay within the specific tax year in question. This ensures that expenses are directly related to the taxable year and aligned with the principal and matching expenses with the corresponding revenue or income. Fifth is must have been stipulated in writing. Kailangan mayroon tayong documents, public document yan. Kung maglo-loan ka naman, madami kang pipilapan. May mga monetary pa dyan. So, primarily talaga, kailangan ay stipulated writing. Di lang siya gawa-gawa na may kasulatang na nangutang ako sa'yo, ito yung babayaran ko sa'yo, diba? Kung hindi yan writing, paano ma-joint demandable kung walang kasulatan? Number 6 is legally due. Kailangan mo siyang bayaran. Diba mayroong date kung kailan mo siya babayaran? Number 7, must not be between related parties. Hindi ka pwede mangungutang, pero actually pwede ka rin mangutang sa related parties. The thing is, expenses siya, hindi mo siya magagamit as a deduction. Remember, sa mga losses natin, kapag related parties, ilo-losses natin, hindi mo siya pwede ma-deduct. Pero, ang gain and income mo, i-add mo sa gross income mo. Kasi, ililimit natin ang pwede natin gawin ng manipulation kung paano bumaba ang tax natin. I-follow natin ang rules kung kailan daw babayaran if related parties. Number 8 is not incurred to finance petroleum operations. So, others said that petroleum operation di nakasama sa pag-finance sa mga deduction. It's primarily reason kung magpautang ka, hindi mo rin yon i-deduct. Number 9, the same is not treated as a capital expenditure. So, pwede kasi sa interest sa pagbili mo ng property kung kinapitalize mo siya. Kung kinapitalize mo siya, hindi mo na siya magamit as a deduction kasi kinapitalize mo na siya. Number 10, the interest is not expressly disallowed by law. So, walang nagsasabi sa batas na hindi pwede. So, kailangan allowed siya sa by law. Kahit anong klaseng interest yan, basta disallowed kung ang nakalagay sa problem ay disallowed by law, iliwag mo na i-deduct. Automatic hindi siya deductible. Deductible amount of the interest expense is the gross interest reduced by the following percentage of the interest income. So, this is the effective percentage. So, dito tayo sa January 1, 2021. Ito yung percentage kung ilan ang ibabawas natin para malaman kung magkano ang interest or taxes natin. A percentage daw is referred to as the arbitrage limit or arbitrage cap. In rationally arbitrage limit, the limit is intended to recover the tax savings of taxpayers who take advantage of the higher regular tax savings created from interest expense, deduction, and lower final tax on deposit interest income. Next is determination or arbitrage limit. To eliminate the arbitrage savings, a deduction cap was set which was mathematically computed as incorporate income tax rate to final tax on interest income. So, next is deductibility. Refers to the ability to subtract certain expenses or losses from taxable income, resulting in reduction of the amount of income subject to taxation. In other words, deductible expenses are those that can be subtracted from your income, lowering your taxable income and potentially reducing the amount of tax you owe. So next is deductibility of discount or pre-deducted interest. So in discount or pre-deducted interest is a prepayment. It is not deductible upon the release of the loan, but upon payment of the same or accrues as expense if the loan is due in installments. The interest pertaining to each installment shall be deductible. Next is optional treatment of interest expense. Interest incurred in financing the acquisition of property used in trade or businesses may at the option of the taxpayer be claimed as first is an outright deduction from gross income, and the second one is a capital expenditure claimable through disposition. Next is other deductible interest expenses. First is interest from tax delinquency. Second is interest from scrip dividends. So this is the example of non-deductible expense. First is interest of personal loans. Second is interest incurred with a related party. Third is discount or pre-deducted interest applicable to future periods for individual taxpayers. Fourth is interest expense incurred to finance petroleum operation. Fifth is interest redeemable preferred shares. Sixth is imputed interest.
Hi everyone, so I will discuss the bad deeds. So bad deeds refers to deeds due to the taxpayer which were actually ascertained to the worthless and were changed of within the taxable year. So I have an example of bad deeds. So let's say you have a own small business and you extend credit to your customer. Once of your customer owes you 1,000 pesos, but after numerous attempts to collect the deeds, you determine that it is unlikely to be repaid. So in this case, you can consider the 1,000 pesos deed as a bad deed. So that's the example of bad deeds. Next is depreciation. So depreciation refers to the gradual exhausted in the value of taxable or tangible business properties brought by ordinary near and tear through usage by the passage of time. So I have an example of depreciation. So, let's say you have a delivery truck for your business. When you first purchased the truck, it had a value of 50,000 pesos. However, as you use the truck over time for delivery, so it starts to experience wear and tear and its value decreases. So, let's assume that the estimated useful life of the truck is 10 years. Based on this, you can allocate the cost of the truck evenly over its useful life, which would be 5,000 pesos per year. So 50,000 divided by 10. So this is annual allocation of the cost is known as depreciation. So each year, you would record 5,000 as a depreciation expense on your financial statements. So to reflect the decrease in the value of the truck due to its usage and the passage of time. So that's all my...
Good day everyone. My name is Jeriel Mipalada and I will be explaining about the treatment of exploration and development costs. The exploration and development costs incurred before commercial production are capitalized as cost of the wasting asset. This will be deducted as depletion expense using the cost depletion formula, which is the tax basis of wasting asset times units extracted, the total of estimated units. Next is charitable and other contributions, requisites of claim for deduction on contributions. The done institutions must be a domestic institution. No income of the done institution must ensure to the benefit of any private stockholder or individual. The contribution must be valued at the tax basis of the property donated. The taxpayer must be engaged in a trade or business. The don must issue a certificate of donation which includes a donor statement of values. Contribution to pension trust. Requisites of deductibility of pension expense. The employer must have established a pension or retirement fund to provide for payment or reasonable pensions to employees. Second is the actuarial assumptions used by the fund must be sound and reasonable. The fund must be actually funded by the employer. The fund asset must be independent from and not subject to the control or disposal of the employer. Contribution for current service cost is deducted in full. Contribution for past service cost is amortized over a period of 10 years. Research and development or R&D costs. Tax treatment of R&D costs. Research and development costs related to capital accounts such as property used in business are capitalized as part of the cost of the property and deducted through depreciation expense. Research and development costs not related to capital costs are treated as follows at the option of the taxpayer: outright expense or deferred expense. Expenses in general, examples of other deductible expenses which are salaries and allowances, French benefits, SSS, GSIS, Pell Health, HDMF, and other contributions, commissions, outside services, advertising, rental, insurance, royalties, and repairs and maintenance. Entertainment, amusement, and recreation or EER expense. EER expenses includes representation expense and or depreciation or rental expense relating to entertainment facilities. Requisites of deductibility of EER expense My God, i-delete yun to, ani. I-crop mo da, The last one is requisites of deductibility of EER expense. It must be paid or incurred during the taxable year. It must be directly connected to the development, management, and operation of the trade, business, or profession of the taxpayers. It must be contrary to law, morals, good customs, public policy, or public order, and it must have paid directly or indirectly to an official or employee of the government. It must duly sustained have been duly substantiated with adequate proof. And the last one is the appropriate amount of withholding tax should have been withheld therefrom and paid to the BIR. That's all. Thank you.